Episode. Thank you guys for joining us. Jake Claver, myself, and then here's Byron Wolf, CFO as fuck.
Yes,
Um,
sir.
anyway, we were getting into DAOs. And so Byron himself, you manage the financials for how many DAOs at this point?
So we've got two that we're intimately involved in. On the DAO, we've represented some coins. We have one that is shutting down currently, and so that's been an interesting piece to get into with the people there. It's a crazy story. The guy that's involved doesn't want me to mention him by name, so I'm going to be very careful about that. But so and we'll talk more about this, but this is one of those like scary stories. So we'll talk about this, and we're going to talk about how the DAO goes. So the individual that I represent, he created the coin, rolled the coin out, very profitable. But with a DAO, and we're going to talk about what a DAO is, but within a DAO, the members, the people within it, are pretty much anonymous, right? So unless they're going to volunteer some information, they're very anonymous. And so he made the mistake of setting up the LLC thinking that it needed to have a specific kind of structure. Again, we'll get into this with the structure of a DAO, but thinking it needed to have a structure. So now his name, his personal name, is on this LLC that's attached to it. Wasn't a rug pull. The coin did well, but the guys that he was in there with it, he met off Discord. If anybody doesn't know what Discord is, it's basically like a Facebook for
Like
techies.
Telegram,
Yeah, like Telegram. Yeah, kind of a bunch of different things kind of mixing together. So met these guys on there. They set it up, did the coin. Coin was successful. These guys take their money and run. Leave
Oh,
them
geez.
with the DAO. He's holding the bag. Just a bad situation. So now we're really getting into the legalities of it. How much is he responsible for? How much are they responsible for? Is it worth the money to try to track these guys down so we can push that stuff over? Yeah, so we'll start it off with one of those horror stories, and then we're going to get into what a DAO is, what makes up the DAO, advantages, disadvantages to DAO, and really, like we talked about in the intro, like what the difference is between how we used to make money and how we're going to make money in the future. And if you think a DAO isn't a big part of that,
Oh,
you're crazy.
you were wrong because
Yes.
it. So traditional, like give people traditional structures, right? So we have LLCs, we have C corps, we have S corps, sole proprietorship. A DAO is just another one of those, and currently they're only legal in Wyoming and Montana. Is
Yeah,
that correct?
Wyoming and Montana, although a lot of states are starting, they're seeing the writing on the walls. And so it's going to follow the same transition that like a series LLC. And if you're not familiar with a series LLC, it's essentially one LLC that sits at the top, and then all your other LLCs are just kind of like children of the parent
Like a
that
holding
is the
company,
original.
and then you would have other LLCs underneath. And
Yep.
we're already like 3 minutes in here, and we haven't told you what a DAO is. A DAO is a decentralized autonomous organization. So,
Yes,
um,
mouthful.
yeah, it's just an abbreviation. Just like NFT is a non-fungible token, there's a lot of abbreviations that we'll probably go over in the show, and we'll try to make sure at least once during the show we do say the entire name so that you can Google it or check it out for yourself. But um, what I really like about a DAO is that it doesn't follow a traditional business structure or the hierarchy where there's a president and then there's a board of directors and then you may have owners and that's all still in place and they're all components of a DAO, but it's more of a circular looking entity rather than a pyramid, if you will.
Yeah,
Um,
100%. So instead of being top down, like your traditional, like you're talking about, top down governance, essentially, person at the top makes the majority of the decisions. They trickle down. People at the bottom are just kind of left going like, all right, cool, we're going to roll with that. So the beauty of the DAO is that it's essentially like bottom up, right? So if created correctly, and you know this as well as I do, Jake, if created correctly, everybody has a say, right? Now there's still there's people that are going to get in there, they're going to buy up all the tokens, try to buy up all the votes, have that in a corporation too. But that can occur, but in its perfect form, everyone has an opinion, everyone has a say so, and all decisions are made by all the
votes.
people that are involved. So bottom
Yeah.
up versus top down.
And I was telling Byron in the prelude to this recording that I'm working on a project and one of those things in that project required me to figure out like what does decentralized mean. And so I've come to the conclusion, and maybe you can put your 2 cents in on this because I do value your opinion. Um, if something gets its consensus more than 15% from a significant or one piece of the DAO or one node on the network, one validator, then I would consider it not as decentralized. So like Ethereum just moved to proof of stake. There's 3 types of consensus for people that don't know. We'll go over that in a later show. But they just migrated to move proof of stake and merged. And there's 2 validators on the network that control 46% of the rewards because they have the largest amount of tokens, right?
Yeah.
And so just one of those, if you cut it in half, would be 23% of transactions are controlled by that node or validator. That doesn't seem very decentralized to me because they could collude with that one other one and then they control 46% of the network. And Ethereum requires 51% for their consensus protocol. So you would only need to collude with one other larger node, and then you could control all the transactions on that network and say they happened however you wanted them to. It would be difficult. And I also like the consensus protocol that the XRPL uses because it requires 80% of the validators to all vote one direction for something to happen.
Yes.
Whereas proof of stake and proof of work require 51%. So if that's the problem with things being decentralized. But back to what Byron was talking about, everybody in the organization that has interest votes on things. And it's not just a hierarchy where somebody at the top tells you what to do.
Yeah, 100%. And talking to that, I agree with you. And so a bit of that. So in the very, very beginning of creating the DAO, it was done essentially as a way to do investing. Like they came up with a new way of creating a fund. It was this electronic fund. Nobody was going to be essentially responsible. Like everybody wins or loses by the common vote, or the majority vote. And so as that process has moved forward, they've streamlined the creation of the DAO. I think it's Oregon. I think does a pretty good job. Like they've got kind of a plug and play. I will point to one of the biggest one of the biggest concerns that I have with the DAO. If you go to Oregon or a number of other sites, they will tell you can create a DAO for the $100 filing fee. I can promise you it is not that easy. And if you go into a DAO with $100, the guy that spends $200 now controls your whole entire DAO, and you don't have much of a say. So in reality, and we'll go into this. This is a much later topic, a much bigger thing. But the general consensus, if you talk to people that are in the know, like Jake, you know this. We've talked about this. I mean, it's $500,000, on up really. To start a DAO, if you're going to do it correctly and you're going to honor
the legal procedures and everything else that needs to be in place in order, the tax ramifications. And there aren't that many people that even do the financials for DAOs, right? So Byron is probably, I would say, one of 10 people in the U.S. that is dealing with this cutting edge type of structure. We talked a little.
And it is up in the air. So like I want to be very clear with our listeners today. It's the wild, wild west. So what we do at CFOAF when we're dealing with DAOs, we're saying, hey, this is what we feel is the most likely scenario for these taxes. And we feel if structured correctly and in this way, then we feel very confident defending this moving forward. And we feel very confident that you're going to have a good experience when it comes to that, the taxation and the governance in the financial world. But there is nothing out there. The IRS is silent. I mean, you can just see the tumbleweeds flowing through when you ask any kind of question on these. I mean, it's not out there. I mean, there's some information, but it is definitely not direct. And it's definitely not clear cut. So yes, we do that 100%. And there's some other people that are in this space, and the collaboration is amazing. Like when you get into this, everybody's looking for more information and everybody's willing to give their info out. of what they think.
Right.
So I love that aspect of it. So I will say, that is a huge win for the DAOs. Is the information is very well shared. I don't feel like Jake and you agree or disagree, but I feel like it's people are wanting this to succeed and they're willing to share their information and what they have to make that happen.
Oh yeah, I would completely agree. Like we had a call with an attorney that we'll hopefully have on the show at some point. And he was super excited about this space and how to structure the companies, and it was interesting to hear his take on things. But even he is green, like he deals with these and still has undefined answers because there are no regulations in place on how to handle this at this point. And
Yeah.
so you kind of have to default to whatever state you're in and kind of how their state legislature says things are going.
Yeah.
And that's why I think it's limited to Wyoming and Montana at this point. I have two LLCs that are in Wyoming, and so you get some South Dakota, Wyoming, Montana. There's a couple other states where you get pretty good tax benefits, and they incentivize people to come open businesses in those states because of the tax benefits.
Yep.
So maybe that's something else we'll talk about in another segment, but. I guess we'll get into like some of the more technical pieces of this. Probably going to run this one about 30 minutes. I think that's going to be the cadence that we run these podcasts, just 30 minutes in length. It's kind of digestible for you guys.
Yeah. I think most people, if you get into this much longer than that, your brain starts
you fall asleep, man. So as far as if you were going to invest in a DAO, like you talked about before, you do some research on some things and you try to make sure that you do your due diligence. So if you're going to put money in one of these things, what's something that you're looking at, and what are your concerns if you were to invest in a DAO?
Yeah. So, and you and I have talked about this before. So, and I'm going to let you explain this real quick and then we'll get into it. So, white page is essentially what is being created. If you hear this term used, the white page is essentially a summary of what we're doing, what it consists of. And I think, you and I are in 100% agreement in the fact that a white page can be written extremely well and still be a horrible, horrible project, right? Some of these can be written very, very poorly. And it doesn't mean that the project is bad just because they're written poorly. So like any investment, and we are definitely not telling you what to invest in or anything like that. But any investment that you get into, I will say this, do your research, right? If you're just relying on your Uncle Tommy that says, man, this thing's going to blow up, that's not a good strategy. But yeah, I'm gonna let you talk real quick about the white page and like kind of your opinion, and then I'm gonna jump into the DAO.
Okay, so yeah, so if a project is legitimate, they should have a white paper online somewhere. White page, white paper, kind of synonymous terms. But you definitely want to go look at that. People that do have a credible team will put it in their white paper. They're going to talk about the governance for the token. They're going to talk about the distribution, the tokenomics, how many are available, what they're going to do with them, how they're producing yield. Terra Luna put this out, and it lasted for a long time. It was a slow rug pull. There was a bunch of people that were on board that lost millions of dollars when they finally melted that thing down. And it was an algorithmic stablecoin, which is now they're going to be getting rid of these. They're banning them for 2 years so that they can try to figure this stuff out, get regulations in place. But I'll kind of explain what a stable coin is. So a stable coin would be the equivalent to your dollar or whatever you use for currency. It does not fluctuate in value. It's pegged to some type of stable asset, hopefully. In this situation, it was not. So they would acquire more assets to back the token or sell assets to maintain the peg. And because of that, people were able to exploit it when the assets dropped that was backing this. And take advantage of the arbitrage. Anyway, it's more of a complicated topic, but a stable coin is equivalent to your dollar, basically, just on chain. And with the white paper,
implies stability, but doesn't guarantee stability.
Does not guarantee stability. CBDCs, central bank digital currencies, they will be fully backed, collateralized, and will be trusted. These other private stable coins that currently exist on the market, um, they potentially have issues unless they have an auditable treasury that they're having third party audits done on and disclose that, which I think will be mandated in the future as we move forward. That has to be done. But that's enough on the stable coins. Back to the white paper. So if they have a credible team, if they have references, and then what the project is going to be doing, you'll be able to figure that out from the white paper. And I would assess if you think it's a realistic way to make money or not. As time goes on, like Byron talked about originally, that's what these were created for. They were investment funds that people would dump money into, and they would generate a yield for the token holders. And I think that'll exist in the future. I think that it'll be similar to how stocks pay out a dividend. If they invest in things that generate a yield, you'll get a yield paid in the token for holding it and staking it with somebody. It will be a security though. It's an obvious investment contract. If there's an ICO, you need to register with the SEC and do everything in compliance as if you were a security. And we'll get into this later. I think I've figured out how things are going to move forward with ICOs that won't be considered securities if it's actually inherent to the network and required for the protocol, the token. It can be sold with the software and not necessarily as a speculative investment. But as things currently sit, the majority of these things are securities, and I believe will be pursued by the SEC. And if they've not registered as a security with the Securities and Exchange Commission, I would be hesitant to put money in them. And there, let me say this. Let me preface: there's always money to be made as long as you get out before the other people.
Yes. Yeah.
So not investment advice, but there's been a lot of people that have made a lot of money and they just happened to get out before the problems occurred. Same thing with Luna. The founder got away with billions of dollars. He's on the run from the Singapore police now, but he has, obvious litigations against him. So, but back to your original point, a white paper can look fantastic like Terra Luna's, and a lot of people can buy into it and then get burned. And then you could also have something that, looks horrible on paper, but actually works in real life. And they just didn't pay the money or didn't have somebody on their team that could articulate it in a way that makes sense. So.
Yeah, I mean, it's the whole mentality of like, you can go poke the bear, and as long as you're faster than the slowest person, it's going to work out for you. But like, why would you poke a bear, right?
Yeah.
So like,
you can
invest in these. Yeah, you can invest in these that that you're trying to get in, make some money, get out before the whole thing collapses, or you can try to find the ones that make sense and are consistent, right? So kind of to answer your, and I appreciate that with the white page explanation. That was fantastic. So when you're looking at that, like you mentioned, the team, right? Who's involved in this, right? Because if there's people that are involved in that have an amazing respectability in the space, the knowledge is high, and they've been brought in at an early level, and they're involved in the creation and the, ultimately the governance of this, right? Within that, then there's a really good chance that that's going to be a solid project. Like you said, like how the tokens play out, is there somebody, like you mentioned when we first started, is there somebody that owns a majority controlling piece of it, right? So if you've got one guy or one group and they have, like you mentioned, 23% of the ones that are out there, that's a huge impact.
Right. They dump on the market, it tanks the price, and then everybody loses, right?
100%. Yeah.
In the piece that I'm working on, one of the stipulations that I think is required of a good project is that the founders don't keep more than 20% of the token for themselves.
Yeah, 100%. Yeah, and there's burn, like we've seen projects. You and I have seen projects. They come in, they say, "Hey, we're going to do this. We're going to burn this many, and we're going to hold this many back, and all these other things." But the reality of it is it should just be a majority interest. Like it's not run by a specific person, team, whatever. So these are the founders that you're talking about. These are the people that are in it, kind of on that floor. So it's not like in a company where you start a business and then like if we need to pivot or we need to change something to, become profitable, we can make that decision from the top down, right? So one of the disadvantages of a DAO is once it's created and we have all these things. Now, keep in mind, all these are smart contracts. We didn't go into that. We probably should have, but it's based off these smart contracts. Smart contracts are essentially like if this, then this, and that may be too simplistic.
It's code. So
So
if you've got rules, just like you would in an organization, they're just coded into a protocol and then they execute based on that. So
yeah.
if you say at a basic level, when we earn this percent on a trade, or if we're going to issue a loan, it has to be this amount of return.
Mhm.
Those would be coded in, and those are the decisions that it automatically makes without anyone being able to manipulate those rules.
Yes, 100%. Yeah. So those smart contracts are just that. They're contracts. If this, then this, and so those are the building blocks, so to speak, of the DAO. So we have to make sure that those are really solid. So as you get in and you're researching these, what's the team? What's the purpose, right? So there's a lot of people that are getting into this space and they're saying, hey, we want to do this for the charitable aspect of it, right? And so if it's a charity, then like it's a charitable purpose. So
Right.
if you're getting into that with the idea, oh, this is going to make a ton of money, well, that's not the purpose of it.
No.
So and honestly, if it did start to make a bunch of money as a charitable, vehicle, that would concern me. Yeah, that's a huge problem, huge red flag. So we need to know what the purpose is, who's behind it, how does it work, who are the major owners. So like any investment, we've talked about this, you got to do your research, you got to know what's on there, and you have to know something about it, right? Like I'm not going to go invest in something that I have no knowledge of just because it looks good, right? It looks cool. I mean, if somebody said, hey, I'm going to do a single person vehicle that can take you to the moon and back, and it's going to be a $5,000 price point. Well, that sounds amazing. Like if that was in reality doable, everybody would invest in that. I mean, that's awesome, right? But that's not realistic. So when you're looking at a DAO, you're looking at like what's there, what are they saying? Is the team,
Legit.
respectable, realistic? Is the purpose in line with what they're preaching, what they're talking about, like what they're developing? And is the baseline good for what that is going to do once it is turned over to the majority, right? Because you can't go in and say, hey, I started this thing, so now I'm going to change the whole thing. It doesn't work that way.
Right.
So we want to make sure it's good, and we want to make sure that the contracts are solid, right? So everybody knows the story about Ethereum when they first rolled out with their DAO, and somebody came in, I think it was like 60 million or something crazy. Somebody essentially allegedly hacked in and took this huge chunk of money out. Could have really damaged the whole DAO ecosystem. Could have really put a hurt on Ethereum. I don't know, Ether, right? Whatever. But could have been a major catastrophe for DAOs in general. And so we've learned, the community, not myself, the community has learned that we have to be very careful on the structure and the creation of that. And everybody knows what a rug pull. Well, I don't want to say that. Jake, I'll let you explain what a rug pull is, because I think this is good information for people to know.
So a rug pull is basically they'll launch a token, they tell all their friends about it, they run up the price, and somebody that's a founder or original member that got in early will cash out at the top and they get to decide where the top is. And so it's basically a free for all until they sell, and then it causes everybody else to sell. And a lot of these things are traded on bots. And so you get kind of a sustainable mass at a certain point, and things that are under maybe $1 billion market cap or a $10 billion market cap are very volatile, because a big player, like to your point earlier with the 60 million, can come in and purchase or dump, and it causes a big shift in the price. And if people have stop losses or other things in place, then they'll liquidate their position also, and it causes a cascade. And so you'll get these large green candles when people buy, and then other people FOMO in on top of them, and then that person will sell their large position. So maybe they had 60 million and they dump it in there, and it runs up, and their position's now 80 million, and they pull, and then it dumps the price. And so you get this huge red candle, and then it's a liquidation event and it goes to zero. So what you want to do with a DAO is distribute the tokens in a way that that's not possible for people to do. Maybe there's a potential lockup period where investors or founders cannot sell their tokens. If it is a viable project long term, then I don't see that there's any issue with a lockup period. Especially, and they do this with real estate, right? So if you invest in a multifamily syndicate, they tell you, hey, you're not going to get your money back for 2 years, and this is the return that you're going to get on it, right? Based on our projections and what we're doing. And there may be cash flow in the meantime, depending on the deal. Same thing here, right? You might get distributions for staking rewards for your tokens, but you can't sell until the lockup period's over. So that's another component that I'm looking at for these white papers that I think should be stipulated as a lockup period until the network is decentralized enough. So no one node validator owner has more than 15% control of the network. But yeah, rug pull, they happen all the time. Even like Mayweather NFTs, I think had some issues. There's MILF token, Come Rocket, and these are real projects that people have launched. I'm not just pulling names out of things. Like there's been some crazy stuff that's happened in this space because of the wild, wild west and non-regulation. But I think that's coming to an end. I think suits are going to move in here soon, and we're going to get some legislation in place, and the things that are viable and will last long term will win out, and the things that are bad for investors will end up going away, which I'm excited about.
Yeah, me as well. I mean, the space is, it's an amazing piece of technology. It's an amazing system of running a company, running a fund. The advantages way outlast, the disadvantages. But there are still disadvantages. There are red flags. You need to look at, and so, and we've said it a couple of times in this. I want to like really just put like a blinking red light on this, guys. It is the wild, wild west. Like it is not a normal system. If anybody is telling you, hey man, it's guaranteed returns, or like, man, this thing
far away.
Yeah, solid. Any of these, they're just not legitimate like that. Those are not terms that exist currently in this space yet. It's coming. And the people that believe in this, we're trying to bring that to it. But there's still a ton of people out there that are just trying to make a quick dollar on this, and because of the volatility, that's easy to do. The arbitrage, like you mentioned earlier, if you don't know what that is, that's essentially making money off of the time difference. If something is this, then you can buy it for cheaper on this exchange or more or whatever. You're kind of making, taking advantage of those minute differences. That has been taken over almost entirely by bots now. So a human trying to do that, probably unrealistic, but very, very realistic for a bot to do, that's making decisions in microseconds. But it still exists. It's still out there, but it's making a little bit of money on something that could be a huge long-term win, right? And so you're always going to have people trying to take advantage of that. The people that are long-term, I believe in it. There's a number of them that I truly do believe in. There's some teams that I truly believe in that I'm very long-term, very bullish on. But you do have to be careful. And like we mentioned earlier, when we're talking about the white page or white pages. So, look at those, do the research, look into what you're investing in, right? Know that it's something that you're going to be into, hopefully long term, because if you're into it short term, you're really taking away from what it's supposed to be, and you're going into it really with the wrong mindset of what a DAO should be. If you're getting into it just for that, you're missing the point, I guess is what I'm saying.
There will be traders on this stuff, right?
Oh yeah, 100%.
Anytime there is an asset or a security, people are going to speculate and try to make money on it on short-term timeframes and trades. But I'm with you. I'm a long-term investor. If I buy into something, it's because I believe in it long-term and the appreciation of it. If an investor, in my opinion, is somebody that's looking 4 years out. So if you're putting money into something and you're going to liquidate prior to a 4-year mark, you're not really an investor. You may be a long-term swing trader. Which I've done also and made good money on doing.
Mhm.
Day traders, obviously somebody that's on a daily time frame or a weekly time frame doing that.
Mhm.
But if you are an investor, I would say that you're looking at that 4 year mark and beyond.
Yeah. And look at what your goals are. If you're looking for that residual income, that comes through, get involved in projects that are like that. If you're going to get into a project that is a growth fund, it doesn't have any dividends or anything like a dividend paid out, then you're going to be constantly selling as you move up, right? And
Right.
that probably doesn't meet your criteria, it doesn't meet what you wanted, what your goals are. So make sure the goals that you're looking at meet, the reality of that situation.
Yeah.
Because if
Well,
you're, like you're talking about the 4 year plan, that looks significantly different on a 4 year plan than it is if you say, hey, I can't afford to lose this money. And that's where people freak out.
right.
You're going to have dips, bumps, things of that nature that are going to happen in this. And if the first time you take a 15, 20% haircut, which is crazy common in this field, and you're like, well, I can't do it anymore, I'm out. Like, that's going to be a big losing mindset for this stuff. I mean, it is super common. Like we know it now. Like I don't know when you're listening to this, but right now, the markets are the crypto markets are down pretty bad. And so, hopefully you're listening to this in 6 months or a year and everything's recovered and everything's beautiful. And you're thinking like, what is this guy talking about? He's crazy. But as of the time we're recording, I think we're at a pretty bad dip. Like, and I'm not going to give my opinion on this 100%, but like there's some huge upside that I see. There is a potential downside, I think, in the temporary in the future. But I don't want
The
to say,
industry as a
man,
whole, I think, will recover after regulations are put in place, and the
yeah,
projects that are going to be here long term will win out, and they will have significant price appreciation. Not going to
yeah,
tell you which ones those are, but that's
yeah,
kind
yeah,
of my thoughts on it as well.
yeah,
Um,
yeah, 100%.
and to your point there, if you have losses or gains, there are significant tax ramifications to that, and I think that's kind of where we can leave it for this one.
Yeah,
Maybe next week we'll get into some of the tax ramifications and some of the ways you can mitigate taxes using digital assets. But that's our time for today, and appreciate you as always, Byron.
yeah, man. Appreciate you, bro.
We'll go ahead and get this one wrapped up and get it out, and on to the next one.